So this week, we do want to pay very close attention to the dollar. So with the dollar is up at the 106 area at the time of making this video, which is about midday on Monday, 9/25. And we're up here around the 106 area, so 106 area. And with that, the dollar has pushed up to the 106.10 area earlier today. We could get that. The resistance area that we see here on the chart, that trend line was already there. We saw that trend line actually come into play a couple weeks ago as well. So that one was there. There was a new one that was created also. But with this area, we want to watch this 106 area again. It's not so much going to be, if you will, the 106 area, more so where is price action once the news events that we have for this week begin to come out for the dollar. This week is a very active week for the dollar. With tomorrow, Wednesday, Thursday, and Friday being news days for the dollar. The dollar is where we want to make sure we focus in all of our attention this week. Make sure that we give very close attention to the dollar this week because we have news Tuesday, Wednesday, Thursday, and Friday. And kind of looking at this news and understanding this news, the news that we have for this week, with tomorrow being Tuesday the 26th, we do have new home sales. And so with new home sales numbers, those numbers are expected to not only be lower than they were, they are expected to actually be negative. So last reporting that was 4.4. This time, that report is coming in at negative 1.7 expected, and the consensus report is for it to come in negative 1.7. We also have the amount of new home sales that decreased as well. And so on Wednesday, we have the durable goods numbers coming in. So with durable goods, those numbers are expected to come in better than the prior report was for defense. But for transportation, those numbers are expected to come in worse. Whereas with orders, month over month, durable goods orders, month over month, those numbers are expected to be better. So we have two reports that are coming in better. Both of those reports that are coming in better are still negative. So let's keep that in mind, that both of those reports that are coming in better are still negative reports as far as those numbers are negative percentage points. So with that, again, another day of potential bearishness. So we have one day of bearishness. We have another day of potential bearishness because numbers are not coming in as should be expected. And then we have for our jobless claims, we have those numbers increasing as far as the number of individuals that are jobless. And so with that, that should be another sign of bearishness this week for the dollar. Right before, if you will, later on that day, Powell, he comes and he speaks at 2 p.m. on Thursday. And then last but not least, on Friday, September the 29th, we do have the core PCE numbers that are expected to remain the same, as well as the personal spending numbers that one is expected as far as spending is expected to drop. So personal spending is expected to drop, personal income expected to rise, whereas goods trade balance is expected to fall. And the Michigan Consumer Sentiment Report, which comes out at 10 a.m., that number is expected to drop as well. So again, more bearishness this week. So again, the expectation this week is bearishness to neutrality, so bearishly neutral for this week. So when we're looking at the dollar, we're saying we're bearishly neutral. So we are expecting this to trend down. Again, before these reports begin to come out tomorrow, this can go back up here. So let's just be clear that this can go back up here because there's nothing currently that will pull it down. There's nothing currently that will pull it down to the weekly open currently. But if we're patient, we can even get this trade in above the 106 area and then ride that trade back down. Because again, this one was rejected before it made it to 106.10. So it didn't make it to 106.10 because it was rejected before it made it there. So it didn't make it to 106.10. So got rejected before it made it there. Again, what we're looking for this week is that bearish neutral understanding as far as with these numbers. So we could get this to pull back not only to this minor quarter area off of this minor dime area, or this minor quarter area, if you will, of 106. So not only just dropping back off of that, but we also get it to pull back to this 105.75 area. And if it loses that area, because that is an area where it does have support around that 782 area. If it loses that, then we could get a bigger pullback, which would then take us potentially here down to the weekly open at about that 105.57 area, which is where currently we have the 20-period moving average. If we take this and we look at it on our charts, we have the UC idea. So for the UC idea, we do have this one below all of its moving averages. And so that's super important to understand, is that this one is down on the week and below all of its moving averages. So when we're talking about bearishness, this one would naturally understand, as far as this one naturally has an inclination towards bearishness already. And then we have for the pound numbers. For this, we could potentially see this one come back and grab its weekly open. Again, it lost that major quarter area last week that we talked about at that 122.50 area. And it did indeed lose that area for the pound dollar pair. For the euro dollar pair, we did recently just lose 106. So with it being underneath 106, that is looking continuously bearish there because of all of the weakness with the euro. So again, could get slight bounces. There are some articles that I'll be looking to potentially post that are talking about getting a bearish reversal for the euro, for as far as this bounce on the week because of this bearish expectation on the dollar. We also have for the AU idea, again, we have this wedge sort of a formation building, as we have these highs that were up here that could not be held while it was above that 200-period moving average, as well as being above that wildcard area. After losing that area, it could not even bounce back to the 200-period area. And now it is currently underneath all of its moving averages, and those moving averages are sorting themselves out to be in order. And with those being in order, that's how we end up seeing flushes that occur and flushes that take place. And so next, we do have for the New Zealand dollar, we do have that one holding on to not only its weekly open, but it is also holding on to its 200-period moving average, with the rest of its moving averages curling up to catch up to price. And so that coincides with the New Zealand dollar being one of the stronger pairs, one of the stronger currencies on the day. And then as it pertains to this week, the New Zealand dollar doesn't have any news being reported this week. And so that's going to be super important to keep our eye out for and keep our eye on, so that we can continue to capitalize on these different ideas. Last but not least, we have the UJ idea. Again, UJ idea is flying. We did get this one above the that minor quarter area right off of 149. And this one didn't quite make it up to 149. It made it up to 148.96. So we'll go ahead and draw this line here up there so that everyone can see what it is that we are seeing and understand it. And this is what we're looking at so far for this week. And so this is what we have. This is what we are seeing. So again, this one can come back down, retest this weekly open area. So first it would need to lose that 148.75 area. And then after losing the 148.75 area, then the next area that we will be looking to is going to be the weekly open over here at 148.37. And we could potentially get it to stall out before there at that 148.45 area. That 148.46 area, if there are buyers that show up, because the news does not come in as bearish as is expected. So this is what we have for our dollar for this week. Again, we are looking for a pullback on the dollar this week. And I went over with you guys like why we're looking for a pullback on a dollar this week, not just simply because we're looking for it, but simply because of the fact that the reports that are coming out this week are bearish for the dollar.